Thanks everyone for sticking with us for these masterclasses. We're at episode 5 and we've been labeling them, like 101. And so now we're at 105. We've been taking people through the basics of using Spark DEX and just the concept of decentralized exchanges versus centralized exchanges. And there's a lot there, right? Once you start digging into the DEX, as you may have noticed from all the previous episodes. Now we're trying to really jump into some real strategies that you can implement and stuff around market making. There is a DEXBot. We're not going to necessarily do a demonstration of the DEXBot, but we want to give you sort of a high level overview of the charting and the trading and how that looks, and some strategies. There's some different conceptual strategies, like valley, mountain, relative, and staggered orders. So George is going to help us with that.
Thanks for the intro, by the way, as well, Aaron. So I think this is sort of one of the last episodes in the series now, and we're talking today about strategies, on the DEX. And here I've just got an example of one of the markets at the moment. This is the Spark DEX BTC to BTS market. At the moment, there is a market making program for this market. So literally, if you provide liquidity for that, you get paid, and that happens daily. So that's pretty cool. But when we're talking about strategies, often, we're not always awake every second of the day, right? So if you're a trader, and given the crypto markets are 24/7, there can be opportunities all the time. If you're trading on a centralized exchange like the NASDAQ or the Hong Kong Stock Exchange or something like that, you go to work at morning, you start at 9 a.m. and then you finish at 5 p.m. and then the exchange closes and nothing else trades. So you don't run the risk of going to sleep at night and 3 a.m. in the morning something might happen. But in crypto, everything is always live all the time. So that's a pretty exciting, and I think it's more of a feature to the crypto markets, but it also means that having some sort of automated trading strategies are important. If you're just trying to do it yourself, you're not going to be available the whole time. So that's where things like DEXBot come in, and we've got an example up here, DEXBot.info. This is one of the websites for an open source trading bot on exchanges like Spark DEX as well. So you can just download it for free. It's all open source. If you want to contribute to it, that's great. And you can get started. So some of the things are, firstly, when we're talking about trading strategies, is there's a few sort of core strategies to talk about. And I guess one of them is called relative orders. So here we have, a chart. We've got pricing going up and down. And we have an order book here as well. So we can see that pricing sort of varies for this BTC to BTS. So that is 357,708 BTS is equivalent to 1 BTC at the moment. And essentially a relative order strategy is you're basically, see how these two numbers are, a small percentage apart from each other. You're putting one bid on this side and you're putting one ask on that side. And then essentially you're saying, well, whatever side it hits, I'm going to be able to execute those orders. So, that is very good in markets that can go up and down like this, right? So, if I'm selling at this price and then I'm buying them back in this price and selling at that price and buying back in, that's the ideal, in that when you see markets oscillating up and down, if you have essentially trades on the order book on both sides, it means that you can capitalize on those opportunities. So that's usually referred to when sort of markets are going sideways or they're trading within a band. If you have trades on both sides of the order book, you're market making. And what DEXBot does is it just has one big old order on the bid side and one big order on the ask side. So that's sort of relative order strategy. And what the bot does is when one of your bids or one of your asks gets taken, then it will refill that amount of money on the other side. So if my bid gets taken at 363 here, then that money which I've just got will now be added to this side at 357. So I'm selling at 363 and I'm buying at 357, right? So I'm selling high and I'm buying low. So that would be the ideal scenario there. Yeah, I mean, is there anything else you wanted to add there as well, Aaron, just on the relative order strategy or just strategies in general?
Well, I think, like you had pointed out about the DEXBot per se, I think it's important to realize you could manually set these orders up, right? And in fact, I think Crypto Kong wrote a pretty great article about staggered orders, which you're going to talk about. And he recommended just placing your orders manually. I think he had a spreadsheet that he shares, and he was doing open.ltc, so the Litecoin pair on BitShares, and he was manually doing it. So I think DEXBot's awesome. I'm still learning that, but you can just manually do it, right? Like you said, you could have just, basically sort of undercut that price on the left you were showing.
Yeah.
So that's just something to keep in mind. I don't think people should feel like, oh, well, I have to do the bot. You could just set your orders. So you could just do your math and figure out how to set it up, right? And I think there's a lot to that that we can get into probably in future episodes where we can really dive in. But yeah, would you agree sort of that assessment? There's sort of a bigger approach here. It's pretty malleable. You can do whatever you want once you figure it out.
Yeah, exactly. Like a trading strategy is a trading strategy, right? So it doesn't matter if it's automated or not. The point is that you're adhering to the principles of that strategy. So when you're mentioning, putting in orders manually, here I've also got an example of that. So there's a thing in the DEX called scaled orders. So here I'm on another market, right? Say the Zeph BTS market, and this is a classic market that always trades within a range. So if we can see here, it's always sort of oscillating in between about 0.12 to 0.9, up and down in that range. So that's a good example of where you would set your relative order strategy on either sides of the chasm here. And the DEXBot has another sort of feature where it says, where do you what do you want the order books to look like? This is an example of, say, a valley view, right? So you can see here that there's actually a lot more on the buy side than there is the sell side, but it's kind of like a valley, it's kind of like a V shape. So this is essentially how you would expect most markets to look, in that you have the least amount of liquidity right at the market price. But then as you go back in order book depth, you get more and more. And that's generally because people have the same amount of money, but they're buying for cheaper. Therefore, the total size of the numbers are bigger. So that would be sort of how you would expect a valley order book to look like. A mountain order book would look a little bit different. I'll just go back here. I don't think I have an example of a mountain on me, but essentially imagine the inverse of this, right? So instead of a valley as a U shape, you've got a mountain sort of like an N shape. So it just means that most of the liquidity is focused right at the market price, as opposed to, right down the ways there. But one of the things I was going to add here when you're talking about manually setting orders is, I could say buy Zeph here at a price of, say, 0.08 at the lowest, and I'll set an upper price of 0.1. Let's just say that I want 10 orders to happen, and the quantity of Zeph is, I don't know, 20, something like that, right? So what that will do is essentially that will place 10 orders at these prices, in between these prices. So in between 0.08 and 0.1. So if I have a look at the order book here, and I can go down, I'll click show all bids. I go down and down and down and down. See how, I can keep going and I see more and more orders. So if I'm going to execute this trade, I'm placing an order at, say, 0.08, and then there's going to be 10 orders between that and up here, we come back to 0.1. So if I was to do that, essentially I can click that. I'm not logged in at the moment, but I can click that, and essentially that would execute that trade. and I would then be placing 10 orders all at the one time. I don't need a bot to do that. I can just log in to dex.bitspark.io and do that myself. So that might be good in a market where you want to set a sort of a number of different orders at different prices. Staggered orders is probably my favorite orders, and that's what we use here at Bitspark to do some market making. Essentially, staggered orders is exactly like this, right? In that you're setting a number of different orders, maybe 100 of them, at say 20 Zeph a pop, in between some sort of price range. And what you're doing is you're setting staggered orders all the way up and down this curve. So I set an order right here at the bottom, I set another one here, another one here, another one here, another one here, and so on, all the way up. So that if somebody comes to, let's say, sell some Zeph in this example, they would first hit my order at the best price, and then they would get progressively worse and worse pricing for them as they execute that order. But for me, it's better and better pricing. So it really depends on what perspective you're looking at. But as a market maker, that's a very interesting way to add liquidity to order books and not have to. In the case of a relative order, just quickly, you've only got one order either side, right? We mentioned you've got the bid and the ask, so you got one here and you got one there. So if somebody blasts through all of your orders, then you might be all out of one side of that trade. Whereas with the staggered orders, if you're setting orders all the way up this curve, it means that they're probably not going to execute all of them at the same time, because that would just be silly. Because if they sold all the way up to here, they're getting a price which is like 6 times worse by the time they get up here, right? So it's actually 6 times better for me, but 6 times worse for them. So it's unlikely that they are going to do that. But large orders do come along. And when you're running a staggered order strategy, it means that you're able to make sense of them. Another good market for this is, let's say, the SparkDex BTC, SparkDex HKD market. So this is another one which is actually done by DEXBot. Here we can see the different tiers of which DEXBot and different market makers are setting it. But essentially here you've got a valley kind of look here. And you've got staggered orders all the way up here. So in this case, this is how many HKD per Bitcoin. HKD is a currency that's pegged to the US dollar at about 7.85. So it's basically the same as the USD. But yeah, you've got a total amount of liquidity here of almost 2 Bitcoin. You've got 300,000 Hong Kong dollars, which is, I don't know, probably about 25K US, something like that. And you've got these staggered orders all the way up. So that's another example of something that if you want to trade the Bitcoin markets, it's unlikely that people are going to pay, a huge price for Bitcoin, in one order. But hey, if they do, and it does happen quite often, that sometimes we get orders that come in and they will just take all of this, right? And they'll just eat all of these different orders. And because they're just executing one big trade, and then eventually at the end of the day, we've had sometimes where we'll end up making like 16% on a trade, because essentially that person was buying 16% worth of depth from the market maker in the market. So that's pretty cool. And certainly as a market maker, that's where you make the dollars, right? So yeah, that's pretty exciting. But again, this is all sort of using staggered orders strategy here as well.
And that also comes from sort of a liquidity issue. Some may say it's a bad thing, but maybe it's also a good thing, where because you're there in that position, I think we can see that with a lot of other markets too. People will sell off or buy overnight. Like you'll see it wick up. All your orders get bought up overnight, like you said. So it's interesting how being ready with the order that might seem impossible, it's actually not impossible. As we've learned, black swan is not a black swan. It's like every day. So you set some crazy orders that you don't think are going to hit. Watch it hit one day. In some aspect of the spectrum you set. And I don't know if you have a formula for that, or you just sort of you eye the market of like where it's already performed, base it around that.
Yeah, well, I mean, even if we go and look at, say, the Bitcoin price or something like that, right? The Bitcoin price is sort of the notorious one, which you can wake up in the morning one day and it might be up 10%, it might be down 10%. You never really know. But if we can get a chart here, let's go to this one. There we go. So if we can get, let's say, a 3-month chart. So essentially the price can like in this case, right, we had a price of 7,495 and then boom, straight up to 9,500. Now, if you're trading, on, let's go back to, we'll go back up here, we'll change it to market depth. So if you're on this and, overnight somebody just goes boom and takes up all of your orders here, then it's a good thing that you're in the market there because you've been able to execute, trades all the way up or all the way down. And what can also happen is, let's say the Bitcoin price moves by, 10% on some of the big exchanges. It doesn't move at the same time everywhere by the same amount. So there's an opportunity there as well for traders to go, well, look, it just went up 10% on Bitfinex, and my orders on say SparkDex are still at this level, so I can go and buy some amount of liquidity here and make money. So for example, if the equivalent price on another exchange is 72,000, then you should be buying at 63 right now. You should be buying all of these orders, all of these ones, because you're going to again go and sell that Bitcoin somewhere else at equivalent of 73. And that happens quite often in the crypto world. So having scaled orders there means that whenever these big moves do happen, you're able to adapt to it, and you've always got orders in the market. And I think another good example there is we can talk a little bit about arbitrage as well. So what we can do is we can look at, let's switch markets. We'll go to let's say the BTS to SparkDex BTC market again. So we'll go back to this one, and we can see here there's some different pricing. I'm just going to flip it around to BTS to SparkDex BTC. So we can see here we've got orders at 0.000, 272 and 277. Now, the BTS BTC market there's a lot of different exchanges that are trading that. So, you've got Binance is one example here, which I brought up. Here in Binance, you can see that the current price for BTS to BTC, which is basically the same thing as what we've got with SparkDex BTC. You've got the price here of 275 and 274. So that's where the ask and the bid is at the moment. So essentially, if you can be able to execute a trade at 272, so let's say you have an order right here, and somebody comes and takes that order, right? Then you can go and immediately sell it on Binance at 274. So somebody takes your order at 272, you sell it at 274. That's arbitrage. And essentially you're making some money on that. So if we just get up the calculator one moment, 272, 274, almost 1% from that. 0.7 something percent. So that's pretty good, and if you can replicate that many times a day at, some larger volumes, say 200,000 BTS or something like that, then that's a good money maker. And if you have a bot which is sitting there, waiting to exploit these different arbitrage opportunities, then that's also very exciting. So I think, that's one way to think about arbitrage is you want to be able to find these markets which have these different pricing opportunities. And, if the price one day goes up or down by a lot, then it's not going to go up and down everywhere. So again, you've got to be able to see those opportunities and then enact on them. So you should be, watching these markets. You should have bots set up in these markets that do it automatically. You should be plugged into other liquidity pools like, say, a Binance or Poloniex or some other of these different exchanges out there, and be able to execute that. And in terms of the different currency pairs, well, I mean, if you want to trade, USD to BTC, that is also an option as well. And, that's a big pair that's traded everywhere. In fact, here we go. Right now on the DEX, the SparkDEX BTC to SparkDEX USD, the lowest bid is 7,800. Now, if you go and look at the current Tether pricing on, let's say, Binance, so we can go BTC, there we go. Wait for that to load. So 7,350. So there's a right opportunity right now. There's probably, by the time this airs, it won't be there anymore, but you should be buying right now at 7,343, and then you should be selling at 7,800. And the reason for that, you're going to make $500 a Bitcoin, right? Boom, straight up money. So the reason that is there is the markets are not efficient at the moment. This is a market which we've been providing liquidity in staggered orders for a while now. You can see my account that I'm logged into is Bitspark Trading. That's one of our trading accounts. But we have different prices up and down the bid here and up and down the ask. Total liquidity about $15,000 in BTC and about 12,000 USD in USD. So yeah, I mean these things are always there, right? So it doesn't matter if you don't want to trade BTS, you don't have to. There's so many other different markets out there, whether it's the BTC USD or ETH to BTC or something like that. All of that is possible on the DEX. And fundamentally, because it's a DEX, as we've discussed before, it's transparent, it's auditable, you can see the trades, it's all public, blah, blah, blah. So it's fundamentally better than trusting a centralized exchange, which could just, up stumps and go away tomorrow. So yeah, I mean, that's some comments on Arbitrage.
Yeah, I think you've really hit some huge points here. And I think, just to kind of recap, we've gone through the staggered orders, the valley, the mountain, arbitrage, looking at different, exchanges and looking for price movements. Again, there's always more to dig into, but just kind of recapping what you've been mentioning. I think that's all super valid. And, I think we can add some charts to kind of like go along with the video where we can show you, there's some good pictures that people have created of how these different order sets look. But that's all I'd have to add. I think that was super valuable. It really gets people thinking. I mean, you can literally just put your order above this one. You might, make the argument, well, there's not a huge amount of liquidity, but you could still be putting money to work nonetheless, right? And I think that's the whole point you're making, is work the markets, and I think patience pays off. So yeah, that's kind of my take on the whole thing.
Absolutely, yeah. So I think the main message is that the tools are out there. Check out DEXBot.info. That's a good bot. It's open source. It's actively developed. People can check that out. There's tutorials as well. Just reply down in the comments if you have any questions about it. We'll be happy to assist with things, or at least point you in the right direction. And yeah, always be looking for opportunities. Whether the markets are up or down, it doesn't matter. In many cases, people get sort of stuck into the buy and hold mentality. Whereas, that's great for that particular type of user. But if you want to be a trader, if you want to, make money, whether the market's going up or down, you've got to be looking for these different opportunities. And, they do exist. It just means you've got to look out there. And, having, the liquidity transparent, having the orders already sitting there in the order books means that you're going to be available to, take advantage of those opportunities when they come. If the price goes up or down 10%, your orders are going to get taken. So you're going to be sitting pretty. So yeah, I think that wraps up this episode, and it's been a great series. Yeah, I mean, if there's any other, comments, do reach out, do let us know. We're happy to do more of these videos in future, and yeah, happy trading, and yeah, keep us posted.
Yeah, thanks, George. I appreciate all the, opening up sort of a little bit of what you've been sharing. I think, yeah, everyone dig in. Let us know your thoughts. Again, this has been sort of experimental, just throwing some knowledge out there that I think is pretty, we can make a pretty good guess that it's, you know, a good starting point for people. There's a lot more, again, to dig into, but yeah, no, great start.
Thank you
Yeah,
very much, guys. See you later.
thank you.